Hi, today we're going to have a look at 2015 higher level cash budget. The first thing we have to do in the cash budgets are our receipts here. So to do that, we're going to look at part 2 of the question. It says that the cash collection pattern from debtors is expected to be the cash customers. 20% of sales revenue will be for immediate cash and a discount of 5% will be allowed. So 20% of the people who sell stuff to pay by cash. The remainder, the other 80%, pay on credit. So 80% of the sales revenue will be from credit customers. These debtors will pay their bills 50% in the month after sale and the remainder in the second month after sale. So of the 80% we sell to on credit, half of them, 50%, pay in 1 month and the other 50% will pay in 2 months. So to do our receipts then, in July we're going to get some money in cash which will go here, cash sales. Then we're going to get some money 1 month later in August and some money 2 months later in September. There will be no figures here, as at the top of the question it says Retro is preparing to set up a business. So in July they're not owed any money from the previous month, June, or the 2 months previous, May. In August they're not owed any money from the 2 months previous, which would have been June. They are owed money from July, so this will be filled in. So to do the receipts, we'll have a look at workings. So for July, in July we're going to sell some goods for cash, we will receive the money 1 month later in August and some 2 months later in September. So our sales for July are 420,000. So I just start off with my 420,000, I multiply it by 20% because 20% of them are for cash, and if they pay in cash we give them a discount of 5%, it says, so we only get 95% of the money, which will be 79,800. And in August, again we start off with our total sales. 80% of those sales are on credit, and of the ones on credit, 50% pay 1 month later, which is 168,000, and then the remainder, which will be the same thing again, the other 50% will pay 2 months later in September. And this will be the same for August. You just start off with the total sales for August, 440, by 20%, which is cash sales, by 95%, because you give a discount of 5%, you're going to get 95%. And then September and October are the total sales for August of 440 by 80%, because 80% are on credit, and half of them, 50%, pay in 1 month, and the other 50% pay in 2 months. So when you get better at these, you might not need to do all of these workings. You might be able to do it straight in the calculator, but for today I said I just show these workings. So now we have to fill these into the cash budget. So in July, I can see that I'm going to get 79,800 from the cash. Then in August, from July sales, I'm going to receive 168,000, and September, from July sales, again, I'm going to receive 168,000. In August, I'm going to receive 83,600. In September, I'm going to receive 176,000, and the same in October. I'm going to receive 176,000. In September, from the cash sales, I'm going to get 110,200, and from the credit sales, I'm going to get 232 in 1 month, and again 232 2 months. In October, from the cash sales, I'm going to get 112,100, and then from the credit sales, I'm going to get 236, and again 236. In November, from the cash sales for that month, I'm going to get 117,800, and the credit sales, I'm going to get 248,000. And I don't need to do January because I'm only asked to do for the 6 months up to December. Then in December, for the cash sales, I'm going to receive 118,750. Then I just total them down. I'll total them down, and then I will total across. So that comes to 2494250. That's my total receipts. Now my payments. Again, I can see from the question, it says with the payments that the purchases were paid for 50% in the month after purchase when a 2% discount will be received, and the remaining purchases will be paid for in the second month after purchases. So there's no cash purchases. The purchases we make are paid for either 1 month later or 2 months later. So again, to fill these in July, the company wasn't set up 1 month previously or 2 months previously, so again, there'll be no figures going in there. And in August, it wasn't set up 2 months previously, which was in June, but there is purchases that I have to pay for from July. So to start off then, the July, to work out my July purchases again, I'll just show workings here. So my purchases in July are 180,000. Of those, 50% were paid a month after, which would be in August, and if we paid 1 month later, we got a discount of 2%, so we only had to pay 98% of that, which is 88,200. And then in September, again, we start off with our total purchases, and the other 50% were paid in September, but no discount was allowed. In August, similarly again, I just start off with my total purchases are 220,000. Half of them are paid 1 month later, which is September, and because we paid in 1 month, we got a discount of 2%, so we only paid 98%, which is 107,800. And then the remainder, the other 50%, was paid 2 months after in October, but there was no discount, so we paid the full 110,000. So again, I think there's no need to work through the rest of those, they're all done the same. So I'm just going to fill these in here. So in August, for my July sales, I'm going to pay 88,200 purchases, sorry. In September, it's going to be 90,000. Then in September, I'm going to pay in August I'm going to pay in September and October. Then September's I'm going to pay in October and November. Then October's I'm going to pay in November and December. And then November's will be paid in December and January, but again, we don't have to do January. So I'll fold these across. To leave you a purchases for 1 month and purchases for 2 months. Wages are very straightforward. They're just 60,000 per month payable as incurred. So I'll just put in 60,000 each month. My total wages come to 360,000. Variable overheads are €10 per unit payable as incurred. So they're €10 per unit payable as incurred. So I'm just going to show workings for the variable overhead. So in July we can see that our sales are 420,000. In part 1 of the question it tells us the selling price is €50 per unit. So to get the amount of units for July, I just get my 420,000 divided by 50, that will give me the amount of units. And then the variable overhead is €10 per unit, so I multiply by 10. And it's the same for the rest of the month. In August, my total selling price never changes. So in August, my total sales were 440,000. Again, I'm dividing by €50 because the selling price is €50 per unit. I'm multiplying by 10 because the variable overhead is €10 per unit. So I just need to fill those in now. So my variable overhead for July is 84. For August is 88. For September, 116. October is 118. November is 124. and December is 125. And again, I just total those across. So that leaves me with a total variable overhead of 655,000. Fixed overheads. It says fixed overheads including depreciation of 65,000 per month payable as incurred. Now there's a reason including depreciation is there in brackets. Depreciation is a non-cash item and has to be taken out of the cash budget. So I have to work out the depreciation each month and then take it away from the 65,000. So I'm going to show working again for the fixed overhead. First of all, I need to calculate my depreciation. So what do you depreciate? You depreciate fixed assets. So what fixed assets did we have? You can see down here. We purchased equipment for 42,000, and that is the useful life of 5 years. Now 5 years is 60 months. So to get the depreciation per month, I'm just going to get 42,000 divided by 60 months is 700 euro. So the depreciation each month is 700 euro. So for fixed overheads, instead of putting in 65,000, I'm going to take away the 700, take out the depreciation, the non-cash item, to leave me with 64,300. And that's fixed, so it's going to be the same each month. So 64,300, 64,300. And again, I'll total those across to leave me with 385,800. Equipment, it says equipment was purchased on the 1st of July for 42,000. So equipment is 42,000 in July, and there was no more equipment purchased, so they will be all zero. And when I total it across, it's going to be 42,000. The loan installment. So if I look back to the question, the loan installment, it says to finance the purchase, a loan of 36,000 will be secured at 6%, that's the interest rate. The capital sum, the actual loan itself, is to be repaid in 36 monthly installments commencing on the 1st of August. So to work out the loan installments, it's straightforward. The loan was 36,000, it's been paid back over 36 months, which is €1,000 a month, and that begins in August. So there's no loan installment in July, and then in August it's 1,000. September is 1,000, October is 1,000, November is 1,000, December is 1,000, and that comes to 5,000. The loan interest, again if we go back to the question, the loan interest, the interest for each month is to be paid on the last day of the month based on the amount of the loan outstanding at that date, which means our interest will change each month. So again, our loan is 36,000, the rate of interest is 6%. So if we go back to our workings on the loan interest, in July the loan was 36,000. The rate of interest was 6%, that will be for the year. So to work out on a monthly basis, I multiply it by 1/12. It's 180 euro. Then, because €1,000 was paid back at the start of August, in August our loan is only going to be 35,000. Again by 6% and again by 1/12 because we're working out on a monthly basis. So each month we can see here that the loan is going down by €1,000, which means our interest will go down. So to fill these in, loan interest for July was 180, August is 175, September is 170, October 165, November is 160, and December 155. And again, we total these across. So now to get my total payments, I'm just going to add all of these down for each month and the total. So total for July is 250,480. And again, I'm just going to copy this across, it will give me all my totals. Now, net cash is just A minus B, or total receipts minus total payments. And that's going to be the same the whole way across. We're going to have 79,800 minus 250,480 is minus 170,680. And I just do the same for each other month and for the total. It'll give me my net cash the whole way across. The next thing I'm going to have to do is to put in my bank loan, because that would increase the amount of cash I had. So the bank loan I got in July, and the amount of the loan was 36,000. I didn't get any other loans, so here my total, if I add across, will be 36,000. My opening balance. In this question, the company was only set up on the 1st of July, so there is no opening balance here in the first column, and whatever goes in the first column also goes in the total column, so that again will be 0. So now I need to work out my closing cash. So to do that, I'm just going to add these down. Minus 17680 plus 36 plus 0 gives me minus 134680. My closing cash in July is going to be my opening cash in August. And again, I just total these down to give me minus 184755. My closing cash this month, my opening cash the next month. And again, I just total them down, and I continue that process over. Now my closing cash in November was going to be my opening cash in December. And again, I total those down to give me minus 905. Now this figure here, this minus 905 does not go here for two reasons. One, because there's a figure there already, 0, and also because it's a total column, not the next month. So now I just add down these here. And again, I get minus 905, which shows that my cash budget is balanced. These two figures here are the same. The second thing I was asked to do is prepare, part B to the question was prepare a budgeted profit and loss account for the 6 months ended 31st December 2016. But first of all, I have to get my sales. When the sales are just directly from the question, the top of the question, 3275000. Then less cost of sales. The first thing here will be my purchases, which again I will be getting directly from the question, which is 1635000. Because what goes in the P&L is the actual sales or the actual purchases, not what we received or paid out. We also have wages will go on the cost of sales, and that's coming from the cash budget because the wages were payable as incurred. So I can take these from the cash budget. Sorry, so wages coming from up here, 360,000. Variable overhead again, I'm taking from my cash budget above, 655. And the fixed overheads again, I'm taking from my cash budget above, which are 385,800, because they are all payable as incurred. So now I'm going to total the cost of sales, which gives me 3035800, and my sales less my cost of sales will leave me with a gross profit of 239,200. Next, I need to take away expenses. So my first expense is going to be depreciation. Now we worked out the depreciation earlier on because we have to take it away from the fixed overheads. We said it was €700 per month. We're doing the P&L for 6 months, so that's just going to be 700 multiplied by 6. And depreciation is a non-cash item, but it is an expense, so it has to go into the P&L. The discount allowed is on sales. So we just get our total sales figure from the question, 3275000. We allowed a discount on cash sales, and 20% of the sales were for cash, and the amount of the discount we allowed was 5%. So it's going to 3275000 by 20% by 5%, which is 32,750. So they come to 36,950, and my gross profit less my expenses will leave me with 202,250. Now I have to just add on any income I got, and the income I got was a discount I received on the purchases. Now this is slightly different than the sales, because with the sales the discount was for cash sales. With the purchases it was for the purchases we paid for 1 month later on credit. So the December purchases we won't actually get the discount until January. So we start again with our total purchases, which are 1635000 from the top of the question. But I have to take away my December purchases because I won't get that discount until January. And then the discount was if I paid a month later, and I paid half of it a month later, 50% was paid a month later, and the discount I received was 2%. So it's 1635000 minus December's purchases is 370,000. And then I multiply by 50% because I paid half a month later, and then multiply by 2% because the discount I received was 2%. Sorry, which is 12,650. So if I add that on to the 202,250 plus 12,650 gives me 214,900. And the last thing I have to do is to take away my interest. And again, my interest I'm just going to get from above here in the cash budget. My loan interest was 1,005. And that's going to reduce my profit. So I'm going to get my 214,900 minus my loan interest. Leaves me with a net profit of 213,895. And that's part B done, the budgeted P&L. Part C to the question was a bit of theory, which asked, part CI says, what options does a business have when it has a cash surplus A and then part B, a cash deficit? Well, a cash surplus, this money can be placed, so this is when they have extra cash, this money can be placed in short-term investment opportunities in order to gain the most interest. So you can invest the money to get more interest. When the company predicts that it will have a cash surplus, this allows it to arrange for short-term investment of surplus funds to gain maximum interest. You get better interest rates if you invest the money. The surplus could be used to pay off any loans or purchase of fixed assets also. If they have a cash deficit, if they're down cash, the business needs to arrange alternative sources of finance, example a bank overdraft, to get them over the period of deficit. When the company predicts that it will experience cash deficit, this enables management to arrange for alternative sources of finance, example longer periods of credit from the creditors or a bank overdraft accommodation to cover such deficits. And part II says, on the basis of the cash budget you prepared, what advice would you give to management of Retro Limited? Some of the advice you could give them would be, there's serious cash shortages in July and August. So we can see here from July and August, there's big cash shortages here. Retro Limited should change the credit terms for debtors to encourage more prompt payment, for example 6% discount for cash payments in the month of sale. So if they offer a 6% discount, people might pay quicker and get more money in. They might also hire equipment instead of buying it to reduce cash expenditure or delay the start date for repayment of the loan or repay the loan over a longer period of time. So if they just hire the equipment instead of making the big capital expenditure of 42,000, they would save themselves some money. They might agree better credit terms with creditors. They might be able to have a longer amount of days to pay them. They might examine variable overheads to see if they can be reduced, and they might examine the wage bill to see if it can be reduced. So that finishes the 2015 higher level cash budget. Thank you.